On episode 93 of the View from Jamestown podcast edition, we have our very special guest, Kathy Hall, come on for her Quarter 3 2023 update. We summarize what happened last quarter and give an outlook for Q3 and the rest of the year. What's up, everybody? Welcome to the View from Jamestown podcast edition. This is episode 93, and we have our very special, very regular now guest, Kathy Hall, joining us for our Q3 2023 episode. Good morning, Kathy. It's still morning here.
Yeah, good morning. And I know last time I was up by you, I said I can't wait to come back in July. So I'm very grateful that you're accommodating me by letting me broadcast live from New Jersey, where it's about 1,000 degrees. Yep. Might be the same by you. So we're all indoors.
I think it's our first virtual recording. You got that new mic set up over there. So we're, we got the podcast, the New Jersey mobile podcast studio over there.
Why, thank you. So, well, let me start by asking you, how has your quarter been? And I'll tell you why I asked, because I had the good fortune to attend the EPL conference in Rotterdam a few weeks ago. And the topic of conversation, no matter what direction it was going, was, what did you hear at AFPM? And what are you hearing now? And that really bookends the quarter for us. So, I'll tell you what I've heard from people, but for you, your customers, your suppliers, have those comments moderated or changed at all from AFPM at the end of March to really right about now?
I feel like it's been a lot of the same sorts of conversations. People are trying to be optimistic, and the time frame for the optimism maybe keeps getting pushed out. I know when we were talking around Christmas time, everyone was optimistic about Q1, Q2, and then now it's maybe by the end of the year, or now people I think are starting to talk about the early part of 2024. But people are trying to be optimistic. I think we have seen an uptick, I think, in R&D efforts and folks really not only just qualifying material because they need to, because their supplier is not producing, as we saw kind of really during COVID, but people are really looking at samples and R&D and new products for the value of the product itself, or trying to make a better product, trying to use better raw materials. So that's been something we haven't seen in quite a while. Business is certainly slow. Sales, pounds sold, all that good stuff is things are certainly a bit down, as I'm sure everyone can kind of tell the same story. But I think people are optimistic, which is, I think, important when stuff kind of slows down. And I think we started to hear, some of these indicators and raw material prices and things like that are starting to maybe trend back up a little bit. So maybe people think we've sort of reached the bottom, and that optimism for the later part of this year or the early part of next year will come true, hopefully.
Yeah. It's interesting that you mention R&D, because when we're talking about different company earnings, that price of the commodities and how it affects, the bottom line is one thing, but for a lot of companies, they're not wavering from their commitments to sustainability, for example. So that spend continues, so that a lot of those companies, you'll see that spend was identical quarter over quarter, because this is set amount for whatever amount of time in order to reach the commitment on time. So the only recourse you've got then to cut your costs are to cut jobs, and in some instances, we've seen that progression where you see an earnings preview saying, things are looking this way, and then come to find out what's ahead is some job cuts in the short term, at least, but no significant reductions in spending on sustainability goals. And so I think that's an interesting thing, because it is a longer term thing that, but in the shorter term, the commodities markets by and large are not doing any of these companies any favors right now. I feel as though at AFPM, which was at the end of the first quarter, certainly for a lot of commodities saw a bounce back, and the caution was maybe this is an inventory restocking, but maybe this is the beginning of, a good demand wave that'll carry us into the third quarter. And I feel as though the conversations I've had, especially in June, especially in Europe, were not it was cognizant that there was no demand coming in to save the day in terms of the quarter. You could have pockets of demand for certain products for a short amount of time, but by and large, there is a sense of the goal is to hold on because this should be a peak season. So to see commodities dropping in price in June for, a lot of your plastics and solvents and things really is, in my opinion, historically unusual, especially to see things dropping at the rate that they have been this quarter. So, if I don't think that the second quarter has been usual in that we're not gearing up toward peak July demand to serve, the end of the year Christmas market or something. It's just not there this year. But I also think that the industry, many industries in the world have had a most unusual 3.5 years. So, if it seems as though if, there was shock and awe in 20 and 21, 22 was more of a sense of being overbought and then being oversold. And, so you'd get more volatility than expected because the market was testing itself, over and over. And then as we're getting into 23, we did see some usual inventory restocking in the first quarter. And I think that gave a sense of calm of maybe we're back to a regular cycle. But I don't think that the second quarter was as robust as anyone had hoped. And now that we're in the third quarter, in my opinion, typically rides the crest of the wave that was created in the second quarter. So we're gearing up and it's prime time driving and we're, blowing and going to make all our, widgets and gizmos for the end of the year. It's just not coming through for a lot of markets. So that's where I feel as though there's not necessarily a bearish feeling. It's more of a hopefulness to hold on to what we have right now, which I think is certainly possible, but that I don't hear anyone looking for a robust third quarter.
Yeah, you'd be alone in that forecast, I think.
Yeah.
It's interesting. So it's mid-July. We're starting to see companies announcing Q2 earnings and all that good stuff for public companies. And I think it was BASF that came out with theirs yesterday. And there's a couple interesting things in there, and kind of alluding to what you just said. One of which being, they kind of feel that we're at maybe the bottom of destocking and things like that. So we're at a point now where companies have very low inventories and need to buy things. And that trickles into something I think you just said where, business might be 15 or 20 or 25% slow, but the flip side of that is that they're still producing 75% or 80% or 85%. So when we say demand is slow, sure, business is off 20% and that's not a great thing, but there's still 80% of business that needs to be done. People are still buying raw materials. There is still production happening. So it's kind of the flip side to it is, the business that is still happening and what the strategy is with that. Some companies we see just chasing, the absolute lowest price they can on raw materials and things like that. Some companies, maybe kind of remember companies that helped them out of a hole or whatnot and are okay paying a bit higher of a price to have that security of supply, partnership and whatnot. So you see kind of different strategies there for the business that is there and is happening. And, obviously everyone kind of fighting for maybe that 20% smaller pool, but, still a pool nonetheless that's out there. And it's been interesting seeing how companies kind of change their strategy now with things being a bit more open and maybe being more of a buyer's market. It's been an interesting couple months to see how those strategies have shaken out.
Yeah, I agree. And something that I think, if in fact we are in this global race to the bottom for a lot of commodities, one of the silver linings for a lot of markets, but what's good for one market is not necessarily good for another, but low shipping rates.
Yep.
So, so we've got really low shipping rates, which as we saw in 2021, even if you had the best price, you didn't if you had to ship it. So, that really got in the way of things for quarter after quarter. So now I know we've started to see in polyethylene in the US that we're able to export. And that's something that hadn't really been a factor until the shipping rates were right. And if there is a a global race to the bottom. The US is pretty close. I think Europe is also pretty close. So we're shipping a lot to Asia. Another thing in shipping that I've heard is that in your typically larger sized cargoes, say like ethylene or propylene, that the cargoes are not the big maximum loads. They're kind of almost half loads. But to your point, it's easy to just go full doom and gloom. And there are still cargoes going, there is. So, I know particularly in resins or downstream plants where you can turn off a reactor or a train, sure, that's happening, and that's where you can get down to, 80, 70, 65%. But that is still a lot of material that's flowing around the world.
Yeah.
And it is still flowing. Right now, like in benzene, the way it's flowing is we have a lot of benzene on the way to the US. So, again, that'll be good for some people, not so great for other people. But, it is what it is. And if that signals that the US is poised to bounce out of a bottom, well, so be it. So I think that the third quarter is really almost being measured in 2-week increments, for what's hitting the shores, what are we loading, and that sort of a thing. That the domestic picture is pretty stable, but it's just, again, if you're, to my point earlier of third quarter is usually riding the crest of the wave of the second quarter, the wave wasn't that big, but I think there's still general stability. It's just at 70%, not 105%.
Right. And so that's, kind of brings us to, I think today, obviously Q2, maybe not the robust Q2 that we've seen in prior years and not as big of a wave, as you said. I like that analogy as in the past. But that brings us to today. And obviously prior to us recording, we talked a little bit about, we're starting to see some rumblings, whether it's downstream customers or upstream suppliers, kind of slowing down plants, turning off plants. Obviously, some companies can do that easier than others. Others are backwards integrated and can't just decide to turn off one day. I know you mentioned you were just traveling a bit and talking to folks. So is that a conversation you're hearing more and more of companies looking to scale back plants or even potentially, mothball plants for a while as they can? Or has that been a bigger discussion point?
Yeah, I mean, I think, it's always fascinating to be reminded of how closely a lot of the industries are connected to one another. And, that it always starts with the smallest, easiest plants. A lot of plastic processing plants, well, they're having a heat wave, they could shut for a week or something like that. You can't turn off an integrated chemical complex or an olefins plant. You just can't. Well, we're going to shut it for a week. That doesn't happen. It's a major decision to even switch a feedstock from something that's not really profitable to something profitable. That itself is a big deal. So we're not seeing the big units shut, but what we are seeing are what I've heard, many times, especially across Europe, which continues to be a low price, high cost environment, which, so to look at things may not be as rosy as you'd like them to be in your US portfolio. Look at Europe. They're really struggling in a lot of portfolios over there. So my point, though, about the rate of shutdowns and how everything is related, a lot of the downstream plants are already shut. And it's the upstream ones that are maybe in a turnaround that are not in a hurry to get back, or some, a plant that was being modernized or retrofitted. It could come back this month, but why rush? Also something that I've been reading about in my own newsletter, the Petrochem Wire, from the plastics side, is that there's that when you're reducing rates and you're not switching grades as much, you're not at risk at producing as much off-grade material. And I wonder if that's true for anybody else that's got any swing capacity. If you're swinging less, you're making almost no off-grade because why would you?
Sure.
How could you?
Right.
So the off-grade market for resins, which is, really it's not necessarily a support system, but it does fill in a lot of gaps for for demand. It's not nearly as well stocked as other grades of prime resin, which I think is kind of interesting. But it just to your point that when a particular tier of an industry shuts by 20 or 30%, it just reminds you that everybody's now going after a smaller pie. And if that's where we're at now, I think the thing to watch in the second half of the year is for those larger units to make more drastic decisions.
Sure.
Is it time to take an economic shutdown for the next 2 months and take that opportunity to do work that maybe was scheduled for the future? This might be a better time to do that. I don't know of any announcements right now, but that's really one of the things that I'd be watching for. I know in the past I've said like, well, I'm going to be watching port closures and freight rates. I'm really watching for worldwide announcements from global companies. So not just the US, although that's my main focus, but looking all over the world of what's being slow rolled, what's being shut or rationalized, and really taking our cue for the second half in there.
Yeah. It'll be interesting to track for sure. Getting into some of the stuff you obviously spend a lot of time looking at and analyzing. Energy prices, obviously, both crude and natural gas have, I think, been relatively flat throughout Q2. Or I guess maybe the beginning part came off and then now have been flat kind of recently. But we can start with either you'd like. What are you seeing on the energies front?
Well, I mean, I think to your point that we're well into the driving season. So, refining economics are what they are, and we're not near the end. So demand is really mid-cycle right now. One thing I will say about gasoline is that a trend that it's certainly nothing new, but a trend that we've seen really ramp up over this year has been the increased use of certain chemicals as gasoline blend stocks. And again, that's just owing to what's the lowest price. In a lot of markets, it's the chemical, being, toluene or xylene or ethyl benzene has been in use as a gasoline blend stock, cumene. And these are not typical gasoline blend stocks, ethyl benzene or cumene. But if there's a limited demand for, say, the phenolic resin chain, well, what are you doing with all this cumene? If you're able to sell that to the gasoline pool, good for you and good for the gasoline pool,
Sure.
price wise.
Right.
That the demand has shifted in a measurable way. And that's something that, again, just coming back from a European conference, that was definitely that was my icebreaker conversationally. If you don't know people, I'm like, how about those gasoline blend stocks? Everybody's like, yeah, thank God.
That's a heck of a way to start a conversation.
I don't need to bring God into this, but there was I mean to convey relief.
Sure.
That, without that demand, it for aromatics, it might have been a much more grim quarter for the sell side. And that trickles down into, other markets, and maybe there would have been rationalizations that we didn't see because that gasoline pull was a pretty strong demand pull. And and again, all forms of transportation fuel are pretty strong this year. And I don't know if there is a direct correlation to the lackluster demand in finished goods. Maybe Christmas will be small because we all went to Europe this year in the States. I mean, I knew easily a dozen people that went to Europe, including myself, that this was really a travel year for a lot of people. And, for most of us without unlimited incomes, you have to choose. So is it a big Christmas or a big summer? So, we did see a lot of travel. And of course, that really boosts the transportation fuels markets. In turn, gasoline blend stocks, because it is that RVP season in which toluene, xylene is very popular. And like I say, the use of ethyl benzene and cumene, it's certainly not unheard of, but it was notable in how strong it was. So, it just reminds you of how connected refining is to petrochemistry sometimes, that we're, you can look at the fuels and think, yeah, okay, but and think of fuels as the thing that helps you transport your chemicals to your customer, but really sometimes the fuel can be your demand source for the chemical itself.
Right. Yeah, that was an interesting point too. I think we saw you see reports about the U.S. economy and inflation and GDP and all that stuff. And sure, GDP is on the rise, but you look at the difference between the service sector and transportation versus goods and industrial production and things like that. There's a big gap. Obviously, all folks are spending money on traveling and doing the travel that they couldn't for the last 3 or 4 years, rather than repainting their garage, because you can get out of the house and do stuff like that. So it's right. People are spending money, just spending money differently.
Yeah. And I think that's exactly right, that the latest statistics in the PPI, right, the producer pricing index, was that it was up slightly, but it was because services were up, not goods.
Right.
So it is an interesting shift. But of course, the other thing that I think that, I've been watching it most of my career, but in the past 2.5 years, watching the European natural gas price has become a thing, I think, for the whole world. So watching the cost of power and natural gas in Europe, at some point, when it's hundreds of dollars, it was quite dramatic. And now it's down to, I want to say $11 or $12 on a dollar per, MMBTU equivalent, but the natural gas here is $2.65. So, in a relative sense, the U.S. is still a low-cost producer in the real broad areas such as energy. But in other markets, like I was saying with benzene, we've got benzene coming from Asia, but we're sending polyethylene to Asia. So the interconnectedness seems like it could be more important this quarter than in a more diverse quarter, because demand is so precious right now. So you're chasing it wherever you can. And if the U.S. can find pockets of demand in Latin America and Asia, that could make the quarter, and I don't know anybody who's giving a forecast for really the rest of the year. It's a lot of just-in-time stuff.
Yep. Well, I guess moving into some of these derivatives, obviously, I think maybe we can talk about benzene first. I know when we recorded in April, benzene rates were in the 360 range, and I think they're most recently just below $3. So whatever that is, a 20% decrease or so.
Yeah, 290, I think, was the latest contract. I think that there is a softening, but I don't see that there's a dramatic dive. I don't know, to characterize it, I always bring them back to the human beings. The human beings that I've talked to in a lot of markets, such as benzene, they're not in a panic. They're mildly depressed. They're like, it's really not going the way I thought it would. I was hoping it would go better. I'm not shocked, but nobody is panicking. Nobody's going out of business.
Yep.
So there's really a sense of, kind of maybe the way you feel when it is 92 degrees out and the humidity is really high. You're just like, ugh, when is this going to be over already?
Yep.
So, I feel like the trend is a little bit, it's wearing on people, but it's not, I don't see a lot of drama. I don't see a lot of volatility. It's a drifting down for some. And even, like I say, I keep talking about, polyethylene exports, that's encouraging for people that are in that market and want the ability to export, but nobody's going to town going, this is it. Like, they're going, hopefully this lasts for the quarter.
Sure. Right.
So,
right.
And it's, I feel as though in a larger sense that, we've got such a hangover from the past 3 years that no one's really rushing to judgment in the present, but there is that shift, in my opinion, of the end of the first quarter was a little bit more hopeful than what's played out.
Yep. Yeah, I think Rob called it a slow burn. You talk about stuff being slower and using the word recession and things like that. I think people think back to '08 where everything fell off a cliff overnight. And obviously, things are slow,
Right.
things are moving in that direction, but it's not a drastic, fall off a cliff. And that's, I think, people hear recession. I think that's what people think of, and that's not, obviously how things have been. It's been kind of a slow trickle down and maybe a slow trickle back up. But eventually, what goes down must come back up, and just no matter how long that
Yeah.
takes.
No, that's true. We've all lived through way more volatile times. But one thing that is, I think, an encouraging fundamental, although it's related to expectations of disaster, is hurricane building. That I mean, there is that certain markets are seeing a little bit of demand from that the storm season doesn't appear to be too volatile, but you never know. And once it gets churning, we've had years where it looks like it's going to be mild, then you have storm 1, storm 2, storm 3, all hitting the same trajectory.
Meanwhile, I think people are still probably working on last hurricane season, trying to rebuild and whatnot. I'm, it's a consistent cycle.
Yeah. So I do think that, we didn't have any dramatic weather in the winter as we have had in the past, but, we'll see where it goes with the hurricane season.
Yeah. Propylene's been another interesting one. Obviously, when we recorded in April, things were much higher. And I think at the time, propylene was trending upwards in a time where nobody was predicting it to do so. And then has come off significantly since then. So what have you seen with propylene, and what are your expectations there?
Well, as I recall at the time, I believe I would say I attributed the uptick to supply-driven demand, which is not the same as demand-driven demand.
Sure.
So you'll forgive my co-host here.
No,
huh?
the more the merrier.
Oh, we have a very needy little co-host. Hi. Anyway, it's better than him barking, right? Wait till I bring him up to James.
Please do. Please do. The more the merrier.
He's small. But anyway, I do think that was exactly what was borne out, was that we had a supply side pull, and that's, wasn't sustainable for, really. So when you look at where true demand is, that's where those downstream markets, it's almost like you're seeing everybody's true colors right now, So propylene is not an unprofitable product, but it's not saving the day for anybody's book. And I think that on a worldwide level, it's really not. You don't see a lot of it flying around the world to one destination in need, and that's true with polypropylene as well. Unlike polyethylene, polypropylene is not being exported from this country, and we're trying to stave off imports. So it's really more of a tenuous or tentative sort of balance of, let's just try to hold on to what we have because it's not bad, but we're not expecting any great gains over the next few months.
Sure.
Unless there's a hurricane.
Right. Which, the way the last couple of years have been, I mean, there's got to be, I'm sure, a couple storms that'll make headlines. So we're coming into that season and see what happens there. So it sounds like, obviously, we talked about polyethylene a bit. It sounds like that's one of the more exciting ones these days. Obviously, you have the big ethylene map right behind you for anyone that's watching on the video version.
That's right.
So what's, I know we've talked about it a bit, but anything else happening with ethylene and polyethylene these days?
Well, I do think that ethylene itself, because there are so many projects and and expansions and new plants that have come on, that there's automatically you do have an overhang until the world demand can catch up to your unit, and that's happening around the world. There's no real big new units in Europe, but whenever a world scale operation begins, it does create length in the market inherently, because you can't run it at 20% and ratchet it up as the world, demand catches up to you. So I do think that trend in a very large sense for US ethylene has really kept it not that volatile. It has really kept it pretty steady because there is material. There is material available. And that's where I think, prices can drift up to 20 or 22 and down to 17 or 16, but it's not the wild swings that we've seen, in past history where, you're swinging up from 30 to 50 and oh my goodness, what's happening, and back down to 40 and then we're at 20. I mean, I think those days are gone for US ethylene for a while because there is so much material. So until the market works off that fundamental length, as the world catches up to the projects that are, or the plants that are online, I think that gives ethylene a real stability. And therefore, as a low priced base product, ethylene is the bottom line for so many things, glycols and lots of, solvents, as well as lots of resins, that it's been a pretty decent shock absorber so that, if ethylene glycol prices are down, it's not affecting ethylene immediately,
right?
So that it's been, I think that's, it's just been a story of margin compression, but the ethylene was not saving anybody's day to begin with. So I think that's where that's at, where I think that the propylene is fundamentally more volatile because there's far less of it being produced. So when you have, and that's what we were talking about with supply driven demand, that when a plant goes down, there is a panic and it's almost immediate. Even just news that someone's going to have to shut down next week will send the market up a few cents immediately. And that really doesn't happen in ethylene because there's a lot more production, there are a lot more plants, and it becomes baked in pretty easily. Oh, it looks like so-and-so's not up. All right, better go over there.
Right.
So, and that's where, if anything, the biggest fundamental change that I've personally seen in ethylene is that Texas has become the more volatile market compared to Louisiana because of the export situation. So export trends are directly affecting what's happening in the Texas storage wells, where Louisiana doesn't have that. So it's been, Louisiana has been at a discount to Texas, which for many years was not the case, but it has been the past couple of years. And there's not as much volatility. But, again, when I say volatility in Texas ethylene, you're talking a few cents here or there, which is big, but is not the volatility that we've seen in other markets.
Right.
Like we're talking about European natural gas, when it drops from an equivalent of $40 to $11, that's a big deal.
Oh yeah, absolutely. Well, the last one we have on our list is styrene. Anything exciting happening in styrene?
I think that styrene globally is a challenging market in general. And I think that in the US, there's not nearly as much production of styrene or polystyrene as there are of the other resin chains. So my understanding is that, if you have a handful of styrene plants, one could shut down. Like my understanding, one might be shut down now, and it really doesn't move the needle much. So I think that the polystyrene part of it, again, like other resins, prices have dropped during the quarter, and that's unusual. But polystyrene is usually one of the more high value products. But I think that a lot of its uses saw quite a nice uptick during the DIY home remodeling craze.
Sure.
And that, you're not seeing that demand now. And maybe it created a little bit more volatility that would have otherwise been smoother if there was not a big boom in redoing your kitchen across the world. But yeah, I think that fundamentally the margins are still there for polystyrene. The margin for styrene, tends to fluctuate, and right now it's obviously improved a little bit because styrene's been essentially steady in the I think it's dropped from the mid to low 50s down to the mid 40s, cents per pound. So it's not a drastic drop, but the more volatile one is the benzene. So right now, that the lack of styrene interest in benzene maybe has contributed to benzene easing a little bit, and that does styrene some good. And then we can maybe get back to a more usual rhythm for the rest of the quarter. But right now I don't see that styrene is one of the happier stories right now. But like a lot of markets, it's steady as she goes. We've been better, we've been worse. Kind of market.
Makes sense. So I think we've covered kind of all the specifics. Obviously, I know we talked a little bit about what we saw in Q2 and kind of what we're seeing today. Obviously, you mentioned keeping an eye on plant shutdowns and maintenance and maybe extended times for plants to be down and things like that for the second half of the year. Any other expectations or thoughts or things you're keeping an eye on for Q3 or things that folks should keep an eye on for downstream demand and production and whatnot with some of these raw materials? What are your hot points for Q3? No pun intended with the temperature down there.
You mentioned earlier that we are about a week away from all the earnings coming out from the quarter. Those will be interesting, of course, but more than usual, I'll be listening to the Q&As. Some quarters go by, you look at the headline, you're like, that's cool, the bullet points, okay. The Q&As, they are inherently the comments that are not necessarily prepared.
Sure.
If they're prepared, they're not being highlighted in the earnings review. So the Q&A really from the analyst community, they can be quite revealing. And I think that this is going to be one earnings season to watch what is revealed about the quarters to come. And I think that I wouldn't say that there's confusion in the market, but I think you might have differing opinions on what the trend will be and what rate it will be. That one company may say, we think the third quarter is going to come in here. And another company might say, we think that same trend is actually going to be elongated over the next 2 quarters.
Yep.
So we'll see where that goes. So that's one thing I'm watching is the earnings call more than ever. And the other thing really is keeping an eye on freight rates and keeping an eye on the news for, when a plant will shut down for a couple of days or have a blip, it's not necessarily in the news, but when a site has, and that's where, again, in your earnings calls, if it hasn't been in the news, it gets called out then. So to see where we are with the major petrochemical sites in every region, but particularly here, will be a really good indicator of the feelings going into the rest of the year. Because in a lot of markets, the general kind of throwaway comment is, I think the year is over. Well, it's only July. So, but it's, I just think that in general, we'll see how over the year really is. Because again, if we're looking at past years, sometimes we're all in a meh mood and we realize we're actually in an overbought market. And now we've got to have, we've got to have an uptick to correct that. So we'll see if there's a correction ahead for us that is not really apparent right now. But watching the freight rates and watching the news of plans for plant operations around the world, I think will be really key.
Yeah, it's a good point. Kind of digging more into those year-end reports. I think there'll be a lot of the same. It's a matter of just how down people are, whether it's 10%, 20%. Those headlines will also all be probably pretty similar. But that's a great point, seeing how fast people think markets will come back, how different companies react to different things. I think that's interesting. The freight part's definitely interesting as well. We just did our kind of internal July episode and talked about freight as well. And freight's kind of one of these things that was a big concern. We were having freight rates with fuel surcharges added because the surcharges were so volatile. And, it feels like over the last couple of months, freight's almost not a concern anymore. We don't really talk about it much. We're back to getting kind of all in quotes that are good for the month, and it's not a huge concern and whatnot. Capacity is pretty good. So the freight piece is interesting. It'll be interesting to see how much that's talked about because it certainly feels like less and less of a talking point as much as it was, obviously during COVID when everyone was trying to move everything.
Right. And and again, if you're in if you're in a general market mood where you're gauging opinions every few weeks, freight can be the difference some of those weeks.
Sure.
It just creates an opportunity that can really change your month.
Yep.
So yeah, that'll be really interesting. I really feel more than ever, I think at some point, possibly during the pandemic, we were talking about, feeling like you're in a time warp, right? That it's been 10 years all at once, or has it only been 10 minutes? That the concept of time. And I feel like the concept of time right now is really very much a week by week information resetting. And that's where we are this week. And this means this is where we think we'll be next month. So this quarter, it's got to be really difficult to give an expectation for any public company on what the next quarter is going to look like, because I think so far the second quarter is borne out and the third quarter is bearing out. We're doing month to month type of adjustments to all of our businesses.
Yeah, I'm happy I don't have to give one of those Q3 forecasts and have folks, placing investment advice on what I'm saying in these forecasts. I give anyone credit for attempting to do that. It'll be interesting to see how those shake out.
Absolutely. Yeah.
Well, Kathy, as always, it was great talking to you. Hopefully, Q4. So what's that? October, November, December. So hopefully early October, maybe we'll see you here in person. Still a beautiful time in Rhode Island.
Absolutely. Yes, I will plan things better around here, and I will hopefully see you and be sitting next to you for the October edition, and we'll see how that quarter really went. What's ahead for us then.
Yeah, excellent. Well, we appreciate it. We look forward to seeing you again in person. Thank you again for the time. As always, great to talk to you, and we will talk to you here in a couple months.
All right. Take care.
Thanks, Kathy. The material contained on this podcast is provided by the chemical company solely for informational purposes. The information is not guaranteed to be correct, complete, or up to date. The information in the podcast is intended solely as a general education aid. TCC is providing this podcast as a public service, but it is neither a legal interpretation nor a statement of TCC policy. Reference to any specific product or entity does not constitute an endorsement or recommendation by TCC. The views expressed by guests are their own, and their appearance on the program does not imply an endorsement of them or any entity they represent. Views and opinions expressed by TCC employees are those of the employees and do not necessarily reflect the view of TCC or any of its officials. All statements, comments, and opinions presented are made in the context of robust dialogue and freedom of expression. TCC assumes no responsibility for any consequence relating directly or indirectly to any action or inaction taken based on the information in this podcast. While TCC strives to keep the information in the podcast accurate, complete, and up to date, we cannot guarantee and will not be responsible for any damage or loss related to the accuracy, completeness, or timeliness of the information. TCC assumes no liability for any errors or omissions in the content of this podcast. The information contained on the podcast is provided entirely on an as-is basis with no guarantees of completeness, accuracy, usefulness, or timeliness. Thank you for streaming the View from Jamestown podcast edition.
Like and subscribe for more.